comparing the changes in the risk range and the spreads from previous periods. So I'll let you guys kind of read that through there in a minute. And at the end of the day, the answer is really kind of, right? So it's it's a bit tricky, but it's basically kind of, and I think most folks understand that the risk ranges are dynamic, and they'll shift with with price, volume, and volatility. So when those things change, the risk range changes, right? So we have volatility move from 24 to 30, those risk ranges are going to drastically, they're going to shift, right? So, in that environment, the low end of the risk range on, say, the S&P is likely going to move lower, and the top end is going to come in, right? Or come down. So, but the same thing, right? So if price shifts, right, all of a sudden S&P, like we had a day last Thursday where, we were up 7%, those risk ranges are going to change. I think for me, what I do when I look at those risk ranges, I'm assessing the day over day, changes, as well as the week over week ones, right? So on a day over day basis provides me a good reference point as to where we've come from. And what kind of, what data may have influenced the shifts in the range over the last 24 hours, like once the VASP kind of signal gets digested, or once those data points get digested by the VASP, and Keith kind of, updates things in his side of his risk range. So that gives me kind of a day over day, right? So like, again, like from last Thursday to Friday, how did the range change? On a week over week basis, that helps me, look at things a slightly longer time frame, and helps me adjust or kind of anticipate, or sort of get a better sense, if there is any sort of Brownian motion, right? So if things are only up, 2704 to 2709 on the low end, and 3212 on the top end at 3215, right? So like on a day over day basis, that's Brownian motion. It's aka not a whole lot to read into. But on a week over week basis, maybe that low end was down at 26 and change, and the top end was at 29 and change, right? So we've had a big move over the course of the last week, and so that to me is something to be really be paying attention to. So if you wanted to take an example from today's risk ranges, we had a couple big lower lows and big lower highs in crude oil, and then conversely, we had some big higher lows and big higher highs in the gold risk range. So go take a look at those and look at what that looked like, basically day over day, as well as week over week. So this time last Friday, and then this time yesterday. The other thing too, just to note, obviously from a widening range, so the comment, the question was really about kind of a widening range, and what to sort of, I guess, maybe read into from that. And the volatility. So again, like all of those factors, price, volume, volatility, can influence how the risk range appears. But a core one is volatility, and I've heard Keith say this a number of times on the macro show. A widening range equals an increasing level of volatility, especially kind of likely on a vol basis within that asset. So again, if vol is coming out, so he's talked about this, I think, last couple of days, or certainly this week, where if vol's coming out of the asset, things are kind of contracting, right? But if a widening asset or widening risk range, like the U.S. Treasuries, right? So the 10-year, for instance, that's been a very wide risk range the last few days, and we've seen the move go from bouncing off kind of like the trend line down at around 113 and moving up to 132, right, as of yesterday's close. So an increasing volatility will widen those ranges. And then the other interesting thing too, or not interesting, I don't know, I mean, just something to note, is a tightening range often, as I said, is a decreasing level of volatility, and lower vol, or kind of lower volatility with an asset as it's kind of coming out of that asset. Fund flows typically move towards those types of assets, right? Especially ones that are in bullish trends. So if you get if you're looking at an asset class with in a bullish trend with sort of a compressing risk range, that's a really nice setup to, it kind of basically putting in, kind of it's compressing. You're picking it up. Hopefully, you're buying some at the low end of the risk range. You're staying patient there, and then it should hopefully continue up in that bullish trend. But again, just kind of keep that in mind in the future.